Are buyers agents going insane? I recently came across some content online going through top suburbs to invest in today. To my complete surprise, we saw three suburbs in Darwin taking the top spots. Now, there is no intention here to disrespect Darwin or the community, but just because a few data points indicate a location will grow, we cannot ignore key fundamentals and human desirability elements when selecting locations to invest in. We need to understand we are investing in property, which is a foundational, hard intrinsic asset. Such assets cannot be treated like penny stocks or pump and dump Ponzi schemes. Every city or location may have a place in an investment portfolio, but our key concern here is that multiple property advisors may suggest locations such as Darwin for their first few investments or a foundational property for a novice investor. Darwin is still a relatively small economy, which is dependent on one or two major sectors. A large proportion of people living in Darwin also work there for a short period of time. They don't live there. They only fly in and fly out, which inflates their household income data. While we see Australia's population growing, there is no data to suggest that people are actively wanting to live in Darwin as a top preference. Another major red flag here is that certain buyers agents are openly stating that the Darwin investment thesis is built purely on low supply and a large number of buyers agents securing a lot of properties in a short period of time, driving these prices higher. This activity ultimately leads to an investor ratio well above acceptable thresholds, and once property prices rise to their affordability caps, these same buyers agents will convince their clients to sell and take profits. Now, if everyone tries to exit in the same time frame, which will happen, then excess stock comes on the market and prices will start to decline significantly. These Ponzi-like markets create an extremely risky environment for novice investors. Holding their assets too long will prohibit them achieving strong returns in these volatile markets. Successful property investing is meant to be a secure long-term investment and not a short-term cash grab. Now, while we also invest in smaller cities or regions, we only do this for certain client strategies who have a budget constraint or with clients looking to further diversify a large portfolio. If purchasing smaller markets, our aim is always to leverage the growth in smaller markets and then upgrade to bigger capital cities or larger locations with the great fundamentals. Ultimately, our priority is securing foundational properties in capital cities or large regional areas which will perform well for both the short term and the long term. I am sure Darwin and other smaller cities will one day become great, secure foundational markets. Unfortunately, the time has not yet arrived for that yet. It is crucial to focus on markets where people genuinely want to live, as many markets are at cycle peaks today.